When can we finally see a full-blown altcoin season? Bitcoin has been doing quite well over this past month, and some altcoins have been outperforming. But when you look at the overall total altcoin market cap and total altcoin dominance, it's still lagging way behind Bitcoin. You have to be very picky in terms of sectors to really outperform Bitcoin right now. I believe I have found the definitive signal which has predicted the last 3 altcoin seasons based on their top and their bottoms. And we're talking about very long-term signals. The last 3 times that this signal has triggered was 2017, the end of 2017, mid 2019 at the bear market bottom, and then 2022 near the bull market top. And I'll show you exactly what that signal is and how we can monitor this, which could be potentially flashing in the next 1 to 2 months. So welcome everyone. If you're new here to the channel, my name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. So let's get right into it. And as we speak, Bitcoin is already nearing 70K, pushing 69,600. Really good to see. But just a very quick glance over the total altcoins, you see that Bitcoin dominance is also pushing nearly 60%. This means altcoins are still lagging behind Bitcoin overall, as Bitcoin's market cap is growing faster than everything else on average. You also see things like Ethereum versus Bitcoin chart ratio continuing to drop. And you also see stuff like the total market cap of all altcoins, excluding Bitcoin, Ethereum, and stablecoins. This market cap is also still kind of choppy. And since Bitcoin bottomed near August, the other altcoins hadn't really caught up as much. So the main question I want to present you, everyone, is why is this happening? And when can we actually see the full-blown alt season? Now, a lot of people will say that, okay, just look at Bitcoin dominance chart. This is the bare minimum thing that people look at. As long as you see Bitcoin dominance going up, we are not in the alt season. And when you see Bitcoin dominance tops out, doing something like this, and then start to drop down, we have alt season. Sure, of course, but that's a retroactive perspective. Right? This is like saying, okay, we are in a bull run when we are already in like January 2021, right? When things were going parabolic. Same thing in back here in April to May 2017, right? Basically summer 2017 when Bitcoin was already pushing new all-time above its previous all-time high. This is when you can definitively say we have an alt season. So I don't think using Bitcoin dominance alone is enough. Okay, so then the second layer on top of that is a metric called net liquidity, and credit where it's due. The first time that I've heard of this is from fellow creator Benjamin Cowen's channel. So he took this concept of net liquidity, which is a TradFi concept that takes into account US Federal Reserve balance sheet against other economic monetary metrics, to figure out this net liquidity, or how much money there is in the markets. And when mapped that over Bitcoin dominance chart or over total altcoin market cap, it usually is a very, very accurate signal. And he was already getting into this 1.5 years ago, right? 2023 summer. Now, the question here is that even though this signal works well, it's a very macro signal and it's a long-term signal. So again, when you monitor this metric, what you have is something like this. So here we have Bitcoin dominance, and I'm going to show you guys the global liquidity here, the net liquidity. This chart in this color, I'm going to make it a little bit more obvious. Let's make it like dark blue. Here we go. So when you monitor this, what you'll start to see that is, yes, it's inversely correlated with Bitcoin dominance, which means it's directly correlated with altcoin season, with altcoin market cap, and with the altcoin bull runs. So whenever you have the global liquidity trending down since 2022, summer 2022 until now, you have Bitcoin dominance trending up. And similarly back here, when you have global liquidity trending up, Bitcoin dominance was trending down. However, because this metric is very macro, it's only updated on a weekly basis, you have to wait until at least like 1 month after to determine a clear uptrend or downtrend on this net liquidity. So even though it correlates very well, the signal on it is not leading. It's a lagging indicator. So this is why I went back to the drawing board and said, ask myself, how do you predict when the global net liquidity is going to increase or decrease? And then, so I went to Google again, as usual, and then I went into the metrics that determine what is net liquidity. So here you go. Fed net liquidity is computed by taking the Federal Reserve balance sheet minus the Treasury General Account minus reverse repo, which means the biggest contributor here is actually the Federal Reserve balance sheet. This term here. This is the biggest contributing number here to changes in net liquidity. And you can monitor this as well. So when you go back to TradingView, you have Federal Reserve net balance sheet, this red line here. And you already see a strong correlation, direct correlation between Federal Reserve net balance sheet and the net liquidity. Whenever balance sheet goes up, net liquidity goes up because Federal Reserve balance sheet is part of the equation that makes up net liquidity. So then the question becomes, okay, you can start to see some patterns here. When you have the US Federal Reserve increasing their balance sheet, they start to increase in September 2019, right here. And then you have net liquidity starting to go up. And right away, you see that kicked off the last bull run that we had from August 2019, not accounting for the COVID crash in March 2020. Because overall, over this period, you see Bitcoin dominance was trending down, which means altcoin season was in full effect. And you also come back here to 2017. You see that here, Federal Reserve balance sheet was going sideways and then started trending down starting from November 2017. And then you have net liquidity trending down a bit as well. And this marked nearly the top of the 2017 bull run. So 2 months after that, in January 2018, when the Federal Reserve is clearly reducing their balance sheet right here, the Bitcoin dominance started to trend up, and this was the bear market. This was when altcoins all topped out, the end of the alt season. And then the third time this has fired is also very, very accurate, and that's in 2020, right here. So you see that Federal Reserve balance sheet topped out near May of 2022, and you see net liquidity start to drop significantly in May of 2022. And then you see down here, again, we saw a last little bit of leg down on Bitcoin dominance. This is the blow off top on altcoins. And then followed by that is the last 2.5 years of bear market we had from October 2022 until basically like now. If you only go by Bitcoin dominance, right? Bitcoin dominance has consistently been trending up. So this is the concept, right? This is not the signal yet, but this is just based on historical data. The 3 times that the Federal Reserve balance sheet has made a top and started to trend down, you had the start of the, when Federal Reserve balance sheet tops out and starts to trend down, this means the Federal Reserve is selling assets, and that's near the top of the bull run. This is when you want to exit. And then in 2019, when the Federal Reserve stopped selling and started increasing their balance sheet right here, this was September 2019. And right after that, we had basically 1.5 to 2 years of bull market, full-on alt season. And then last time that this happened, again, in the opposite direction, Federal Reserve started to sell off their balance sheet. You have Bitcoin dominance start to trend up shortly after that, 2 months of blow off top right after. So how do we determine the next time that the Federal Reserve is going to increase their balance sheet? By showing a uptrend again on this chart. And conversely, you have net liquidity start to trend up. And then, of course, most likely scenario is that Bitcoin dominance starts to trend down. How do we predict this? Of course, we can react to it, but the key word here is the signal to predict it. And I think I have found it in the Federal Reserve's actual announcements. So that's in what I have researched today. Okay, so a little bit more background. How does the Federal Reserve actually monitor, how do they actually manage their balance sheet? They do so using these things called open market operations. So here from Investopedia, open market operations is a term that refers to the purchase and sale of securities in the open market by the Federal Reserve. The Fed conducts open market operations to regulate the supply of money that is on reserve in US banks. And they do open market operations using a type of special accounts called System Open Market Accounts, or SOMA. If you remember back in the March, April, May-ish 2020, right after COVID, there were a lot of announcements specifically using this abbreviation SOMA. Whenever they say that they are managing the SOMA account, this is basically Federal Reserve's special account that they keep investments in, that they keep securities in. So here, the System Open Market Account is managed by the Federal Reserve Bank and contains assets acquired through operations in the open market. So when the Federal Reserve says they are buying or selling assets or increasing or decreasing their balance sheet, it happens in the SOMA account. So, okay, we know this is what they use. How do we know when they start buying or selling? Well, it's actually all in their announcements, and they are all in the FOMC meeting minutes. So here, anyone can go on the Federal Reserve's website and look at the past FOMC statements. But basically, nobody does it. Every single statement has the full PDF, full HTML, and you can read all of it. And I actually went through, based on the timing of these turn of events here, and I went to the exact FOMC meetings over the last 3 cycles, and I found what they said. So hear me out here. First, we have the 2017 cycle. So remember what happened in 2017. I'm going to only look at this one. This is the Federal Reserve balance sheet in 2017. So basically, what this chart tells us is since November, December 2014 until about October 2017, the Federal Reserve kept their balance sheet stable, didn't do anything. And then in October 2017, they started reducing their balance sheet. How do you find this from the FOMC website? Here. So this is the Federal Reserve Bank of New York, and they have outlined all the open market operations that they have done since 2008, since the financial crisis. So you see here, between 2008 and 2014, to ease the stance of monetary policy, the FOMC has authorized 3 rounds of large-scale asset purchases. So this is from 2018 to 2010 to 2012. So this is when they have increased their balance sheet by a lot. And when you look at here, the balance sheet, you see 2008, first major increase in their balance sheet, and then 2010, second major increase, and then 2012, third major increase. And then April, they stopped increasing. Okay? So you can directly match that to these 3 large-scale asset purchases. Okay? So this is like a bit of way too old, because back then, Bitcoin hasn't even existed. And before 2012, Bitcoin really didn't have a market. So this is just some history. After the third round, here's what they did. So from 2014 until 2017, they basically did nothing. Starting in October 2017, the FOMC started to use this word called balance sheet normalization, which effectively just means the FOMC began to reduce its securities holdings to normalize the size of its balance sheet by decreasing investments. And this is October 2017. And when you look at, again, the the net balance sheet of the Federal Reserve, you see October 2017 right here. This number started to decrease. This is the securities holdings of the Federal Reserve. Okay, so this is already matching. Now, they also give you the timelines here directly from the Federal Reserve Bank of New York. So they say that in 2015, the FOMC first made an announcement, and then June, September, October, they made announcements in the FOMCs. So you can actually directly find these on the historical FOMC meeting minutes. And here they are. June 14, 2017, this is that announcement. June 14, 2017, FOMC statement. And you don't have to read most of this because the first parts are what people really care too much about, which is like their jibber jabber and their interest rate, etc. But you see down here, they have announced something for the balance sheet normalization program. So the community currently expects to begin implementing a balance sheet normalization program this year. And this program would gradually reduce the Federal Reserve's security holdings by decreasing reinvestments of principal payments. And this is June 2017. After that, so basically in June 2017, they announced, okay, we plan to reduce our balance sheet sometime this year. And then in September 2017, they made another announcement at the next FOMC saying that we have outlined this program to reduce the balance sheet before, and we're giving you another early signal. In October, the committee will initiate the balance sheet normalization program described in the June FOMC meeting. So they're giving people plenty of warning, saying that, okay, we announced the program in June, we give you a warning in September, and in October, we're going to start reducing their balance sheet. And then again, in the November 1st meeting, right after October, they have said the balance sheet normalization program initiated in October 2017 is proceeding. Just means that they have to announce this, right? We are reducing the size of our balance sheet, the Federal Reserve. And guess what happened on the actual data, right? June, nothing really happened. Even until October, nothing really happened. But then starting from October, it's proceeding. And guess what happened? The Federal Reserve balance sheet starts to increase. Exactly to the T, right? It's perfectly clear here. And this didn't mark the exact moment of the top, but it was already very close. We only had a blow-off top on the altcoin market going into January 2018. And basically, January 2018, every altcoin topped. So this is the 2017-2018 altcoin cycle, okay? The end of it. Now, fast forward to 2019 down here. August, September 2019. Did this signal trigger again on the FOMC? Let's take a look. So here is the FOMC developments in 2019. So the Federal Reserve actually keeps track of all of these previous balance sheet normalizations in a specific page that you can go ahead and check out right here. Just Google this, history of the FOMC's policy normalization discussions and communications. Sounds very complicated, but this whole list of stuff is basically the dates of when they announced something around their balance sheet and what they said. And I have highlighted here. So at the conclusion of the March 2019 FOMC meeting, they announced another statement on balance sheet normalization. So that's this one here. Not this one. This one here. March 20, 2019. Right after one of the FOMC meetings, they announced that, okay, we are giving people early signs again that we plan to slow the reduction of our treasury securities holdings by reducing the cap on monthly redemptions from the current level of 30 billion to 15 billion beginning in May of 2019. Now, this sounds very complicated, right? Why do they say this opposite language? Why do they say slow the reduction of our balance sheet holdings? Think about the double negative that they're saying here. So remember, from 2017 until 2019, they were reducing their balance sheet, right? This number was going down. And that's why they say that there is a reduction. When they say we're going to slow the reduction, that means, translated to normal language, that means we're going to sell slower. And they also say that in September of 2019, they will conclude the reduction of our aggregate security holdings in the SOMA account. Again, they can't say we're going to start buying. All they can say is we're going to stop selling. This is so tricky about the Feds and the FOMC language, is they cannot be overly bullish. All they can say is, okay, we're going to be very conservative and we're going to sell, or we're going to sell less, or we're going to stop selling. So that's why when you see slow the reduction, this is also stands for selling much more slowly, and then conclude the reduction means stop selling and start buying. So basically in March 2019, they said we're going to start selling much more slowly in May, and then stop selling our securities in September. And after that, they also basically just like the last cycle, they followed up with more announcements. So here in July 2019, the announcements at the FOMC, after that, they very briefly just said this: the committee will conclude the reduction of its aggregate securities holdings in the SOMA account in August. So they first make the early signal in March, and then in July, they said, we are going to do this. Starting from August, we'll stop selling. And then again, in October, they come out and mention all the things that they have said before, and says that the Federal Reserve will purchase Treasury bills at least into the second quarter of next year in order to maintain over time ample reserves balances. And here, effective October 15th, they will authorize the Federal Reserve Bank of New York to purchase Treasury bills at least into the second quarter of next year, and to continue reinvesting all principal payments from the Treasury Reserve's holdings of agency debt and agency mortgage-backed securities received during each calendar month. So this is the official announcements after they have announced that they will stop selling. This is the one that says, okay, we will instruct the guys that manage our accounts to start buying securities. And this is in October 2019. So then we take this information we had gotten from, we basically digested, dug into from the FOMC statements, and then we go back to their actual account numbers. Look at this. August 2019, Federal Reserve balance sheet bottoms out, and then September starts to tick up. Exactly to that month. We know that they started buying in October, and here you are, October, first week of October, it's already starting to tick up significantly. And you see after that, it didn't go down at all anymore until March 2022. So this is a major policy change again, and it matched exactly to the month. And guess what happened to the market? So here is Bitcoin dominance on top. Right after August to September 2019, Bitcoin dominance topped out at 72%. Yes, you can say that in September to December 2020, we had this, but this was right after COVID. So again, the caveat here was there was a black swan event here, but even if you got into altcoins here, your altcoins did not make a new low against Bitcoin, because Bitcoin dominance did not break above this, you could say, all-time high that has never been broken above again since July 2017. So if you bought altcoins here, this was like full-on bull market for you for 2 years of altcoin season, just based on Bitcoin dominance here. Okay, so that's the second time that this signal has triggered. What's the time after that? Well, that brings us to the bear market we just went through since 2022, right? So we all know, okay, in 2022, Bitcoin was near 60K. It had two tops, right? First in March 2022, and then in October 2022. So right around that time, in the summer of 2022, the Federal Reserve balance sheet topped out right here, April to May 2022. And if you sold altcoins here, you would have been totally fine because most altcoins were trading like, this was when, Doge, Shiba were trading at like over 50 billion market cap. And sure, you would not have caught the blow off top just like in the 2018 top, but I don't think this was kind of worth it. So if you take that caveat there, this signal was a super good exit signal for altcoins. If you had sold all your altcoins in April to May 2022, you were very happy over the last 2 years. So then, did this again trigger as an early warning sign on the FOMC statements? The answer is yes. So again, let's go into it. So on the same webpage on FOMC's website, remember this history website. If you scroll all the way down, you come to here. This is their latest summary of their history. At the January 2022 meeting, the FOMC issued a statement laying out high-level principles regarding its approach to reducing the size of the Federal Reserve's balance sheet, including the sequencing for removing policy accommodation, whatever. So in January 2022, they said, we plan to reduce our balance sheet. And then at the May 2022 meeting, the FOMC announced the real plans for significantly reducing the size of the Federal Reserve's balance sheet. Very clear here, outlined in the Fed's website. Okay, and then you go into the actual FOMC calendar, right? If you scroll down, go to 2022, here they are. January 2022, outside of the official statement, you see this extra statement here. Principles for reducing the size of the Federal Reserve's balance sheet. This was when they announced the plan. And then May of 2022, plans for reducing the size of the balance sheet. This is when they actually start to reduce. And you can just directly click on these links and you see right here, this is the first one, January 2022. The Federal Open Market Committee, FOMC, agreed that it is appropriate at this time to provide information regarding its planned approach for significantly reducing the size of the Federal Reserve's balance sheet. You don't even have to read any of this. This is perfectly clear, this sentence. They gave this early warning sign again that they're going to start selling their assets, reducing their balance sheet back in January 2022. And then here it is in May when they actually start to do this. Consistent with the principles that they outlined in the January meeting, they said beginning on June 1st, the principal payments held in their SOMA account will be reinvested to the extent that they exceed monthly caps. It sounds very conflicting. Why is it reinvest? Because they're putting a cap on the reinvestments. So you have to read between the lines here. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities and to the extent that coupon maturities are less than the monthly cap Treasury bills. So they're also reducing the size of their holdings in agency mortgage-backed securities. And they're putting a cap, specific numbers of how quickly they can reduce. So with these two statements coming from the FOMCs, you then go back again to the balance sheet numbers. And here it is, right? This number right here. January 2022-ish, it was still increasing slowly, but then by the time of May, you see it tops out. And then it starts to go down. And shortly after that, we had this right here, this Bitcoin dominance, last little bit of blow off top on altcoins. So September 2022-ish, most altcoins have topped already. You were not making money anymore. So if you had exited right here on this signal, again, you would have avoided the entire altcoin drawdown from 2022, let's say September until, well, basically right now, right? Bitcoin dominance is still trending up. So the third time that the FOMC announced this, again, it was a correct signal. So this is just goes to show you that how powerful this signal is. And I really think I have found something quite meaningful here, which is everyone looks at these liquidity numbers and they try to do TA on it, right? They do, TA on Bitcoin dominance, and you could say that, okay, Bitcoin dominance usually tops out in this range between 60 to 70%. True, but is it going to be right here, or is it going to be 65, or is it going to be 70? And is the timing going to be now? Is the timing going to be 3 months, 6 months? Nobody knows if you only look at TA. And even if you follow this Federal Reserve balance sheet number, right? Remember, it gets updated on a weekly basis and their policy changes on a monthly basis. So at the very least, it will be 1 month late, okay? If you follow only this number based on charts. But what I think I have found is this. If you go on the FOMC calendars and then you look at the next two FOMCs, the next one we have is November 6th, November 7th, right after the elections, and then December 17th to 18th. If the FOMC comes out and makes one of these side statements again, like back here, and says, okay, principles for stopping the reduction of the size of the balance sheet reserve. It doesn't get better than that. It doesn't get clearer than that. It would basically mean that they are officially announcing the change in their policy. And guess what? We are already getting the early signs of this. So here we are in the current cycle of the expansionary phase of the next FOMC Federal Reserve balance sheet. So even though their official history page hasn't announced anything, they have given that early signal. And that comes in here on this one, in the May meeting this year. So here we are, May 1st of this year, 2024. They said this. The committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. However, beginning in June, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from 60 billion to 25 billion. That translates to, okay, in May of this year, they come out and said, we're going to make this early signal for you guys, right? Just so that you're not caught off guard. Even though we know we have been selling our securities and reducing our balance sheet, we're going to slow the pace of that. And beginning in June, we will start selling half as fast. We used to be selling up to 60 billion per month. Now we're only going to sell up to 25 billion per month. And here they also said that the committee will be prepared to adjust the stance of monetary policy as appropriate if risks emerge. And basically this also leaves the table's doors open and says, we can even completely turn this off and stop selling when we see it's right. And shortly after this announcement, the New York Federal Reserve Bank came out and made another interpretation. So implementing the plans for balance sheet reduction, and they dug into all the previous FOMC announcements and said that to ensure a smooth transition from an abundant to ample reserve supply, the plans stated that the committee, the FOMC, would first slow and then eventually stop the pace of decline in the size of the balance sheet when reserve supply is still somewhat above the level it judges to be consistent with ample reserves. Last week, the committee decided to start slowing runoff in June. So that's directly referring to this announcement right here. So even the New York Federal Reserve, the guys that actually make these buys and sells, says that since we are slowing down our selling, eventually we will stop selling. And how soon is that? Well, judging by 2017, right? They made their first announcement in June, and then by October, they stopped selling. This was a 5-month period, right? We have also in 2019, remember they made their first announcement in March, the first warning sign, and then by October, they started buying. So this was 8 months. And then in 2022, you have January was the first announcement that they made as a warning sign, and then in May that they completely made the pivot. So this was 4 months away. So the last 3 times, the delay period between the first warning sign versus the actual pivot is between 4 months to 8 months. Okay, so this time around, the warning sign that we have gotten is right here, back in May. So the most extended that this goes, if you take 8 months after that, that gives us like January. So do I know for sure they're going to make the full pivot, another announcement in November, December, or January? I don't know. But I am quite sure that it will happen within the next 3 FOMCs. I am fairly confident it will happen within the next two meetings. Because we're already getting quite overextended right after the election, it just makes sense. And so what are we likely to see then? What is the signal to monitor here? Am I saying you should buy altcoins right now? No. Until the next FOMC, at least in November, Bitcoin dominance can continue to trend up. Because the Fed can only make pivots during FOMCs. So that means from now until at least November 6th, the Fed will continue to sell, something like this, right? For this balance sheet to go down, and conversely, Bitcoin dominance should continue to go up at least for like 2 more weeks. If they make this pivot and comes out and says something like conclude the reduction of our balance sheet in November, that means the Federal Reserve balance sheet will bottom out like this, start to go sideways. And then Bitcoin dominance likely makes double top like this. I'm drawing these very, very zoomed in. Just bear with me here because this is very macro. And right after that, the meeting right after that is usually when they will announce that they will start buying assets again. And when they do that, the Federal Reserve balance sheet starts to take up, Bitcoin dominance starts to go down, and this triggers the clear signal, the early signal that altcoin season starts. And you can quite confidently invest in altcoins again, because that gives us a scenario just like September 2019, where it was basically 2 years of bull run. So that's it. That's all you need to follow. That is step by step, a real metric, and not only the metric alone, but the actual announcement that tells you which direction this metric will go based on the FOMC meetings. I really believe this is as clear as day to me that tells me, okay, alt season is not going to happen right now. It has a very good chance of happening right here, giving us a very good sign on the November 6th to 7th FOMC meeting. If they do not make this announcement, then we move on to December 17th to 18th. Potentially they make it. If still they do not make that announcement, then we look at 2025, right? Then we look at January 28, 2025. But either way, we know the clear signal. And all we need to do is to monitor these FOMC meetings, look at what they're actually saying in those meetings, and I'll be making follow-up live streams, interpreting the announcement, the statements right after they come out. And it's also not that complicated to read, right? So let me just show you an example here. We already looked at the May meeting, right, where they said they will continue reducing but slow the pace of reduction, okay? And when you look at since then, let's say the September meeting that we just had, go to this page, and you see what they said here. Yeah, actually, I already have it open. So in the September 18th FOMC meeting, they said this: the committee will continue reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities. The key word here, continue reducing its holdings. Very clear. Continuing to sell, continuing to reduce the balance sheet. And in fact, you can go on the same website, right, FOMC calendar, and go on every single one of these statements, and they have always repeated this sentence: continue reducing its holdings. When they make the pivot, they will take out the sentence and they will replace it with something else when they make that pivot. They will say maybe stop reducing or conclude the reduction, whatever it is, right? You just have to know like decent English and make sure you look up this sentence, because they're very consistent, at least with the language that they use. And if they said this, then the time that they stop saying this and say something else that's opposite of it, that's when you know that they're making the pivot. Simple as that. So that's it. And that's what I really believe will be the actual trigger that gives us the balance sheet bottoming out signal for it to tick up. And what that means is net liquidity will start to tick up, and then Bitcoin dominance will start to go down, and then you have basically full on alt season, whatever altcoin you want to have, whether that's like AI coin, meme coin, layer one, whatever, right? You can throw a dart on the board and you can have a good time. And even if you're like me and you're still very stubborn on holding Ethereum, like here's Ethereum's chart. And when you compare Ethereum's chart with the FOMC balance sheet, you see very clear. Even Ethereum versus Bitcoin ratio tops out right here, and it has just been going down. And a lot of people have been saying, oh, like when can ETH BTC actually start to trend up? Very clear. ETH BTC trends when full alt season actually starts. And when this happens on Federal Reserve balance sheet, ETH BTC should reverse. This is the macro data. This is not based on TA. I don't know what percentage that will be, but I know when this macro trigger happens, this will happen. Same thing as back here. ETH BTC ratio bottoms out August 2019 when Federal Reserve balance sheets start to increase. And back here, when, look at this. When Federal Reserve balance sheet tops out October 2017, you have the blow off top of Ethereum right after that, January 2018. Very simple, right? So I think this is the most important thing you should watch. You should get out of the Bitcoin dominance chart, because whatever you see here, whatever kind of TA you do, it's going to be reactive. It's going to be a lagging indicator. And although following Federal Reserve liquidity is important, the real policy pivot comes from the Federal Reserve statements. And truly, this is why I think the next two FOMCs right after the elections is going to be so crucial. If they make this announcement, full on bull market for altcoins. And let's see if I'm right. Like, this has already been right 3 times. Let's see if it's right the fourth time. If anyone finds like a loophole on this, or some logic flaw, please let me know. Leave a comment down below. And if you think it's actually smart, or if you want to see how it goes, if you want to refer to another friend of yours or analyst, whatever, see what they think, share this video, and especially subscribe to the channel, because I will be making follow-ups using this methodology at the November FOMC meeting and at the December FOMC meeting, going into the statements and seeing if they made a pivot, and then we'll follow the Federal Reserve balance sheet to see if it actually happens to increase again. And then if Bitcoin dominance trends down after that, and if we have the bull market. If it does, then big flex I will have, because I will have called the alt season before anyone. If it doesn't, maybe something's wrong. So we'll see. I'm going to make continuous updates on this methodology, on this signal, on my Twitter or X. You should follow me there on VirtualBacon0x. I actually made a raw presentation of this announcement, of this methodology, this signal 3 weeks ago to our insider community when I was still doing the research. So all of you guys that are in there, you have already seen this. It was very raw, but you guys got the earliest sign to this. So join there. It's completely free trading community. We have over like a few thousand members now. So sign up and I'll see you there. Okay, so that's it. Thank you guys for joining, and I will see you on the next video and next live stream. Cheers. Bye-bye.